Cool. Right, let me get going. Alex, can I just make you co-host? If you can just help me let people in, just while I'm trying to get everything sorted here.
Sure, no problem.
Cool. Let's try and not let the note takers in. Okay, right. So let me get going here. Boom, boom, boom. Where's the mastermind? There it is. Let me put a message out here. Uh, okay. So boom, boom, boom. Where are we? Let me get my bearings here. Okay, so I need to record this. I am recording already. Let me share my screen. Okay, so welcome everyone to the Fireside Chat. And we don't normally record this, but tonight I do want to record it because I want to be able to share with everyone what I learned with Robert Kiyosaki and the session. To be honest, there's a lot of content that I put together. And yeah, I think just in terms of where we're at, if anyone wants to do the check-in, please just type it in the chat box so that I can see. My suggestion is, well, I'll start with the Robert Kiyosaki review, and then if people want to do the check-in, they can do that afterwards. So hopefully that's good for everyone. Let me just see here quickly. Boom, boom, boom. Okay, cool. So I've got everyone up here. I don't think there's anyone. Rail, maybe you haven't done your check-in. Shawl as well, maybe. So anyway, if you guys want to do your check-in, let me know. Okay. So what I want to share with you is this here. So it's not in a PowerPoint. And Alex, I know you always say to me, I'm not allowed to give away my secrets, but am I allowed to tell everyone how I created this document?
As long as you put a caveat to it that it's coming from your brain 90% of the time.
I mean, just to put in perspective, I'm going to stop sharing quickly just to share this. So this is quite interesting. Okay, so you're in a live event. I've obviously got my phone with me, but I also had my backup phone, which was a camera, and I had it on a tripod. And I started trying to film the different parts. And twice they came up to me and said, "Put your camera away. There's no filming allowed." Okay, so that's the first part of the equation. The second part is that I use Notability, which basically no one can tell whether I am or aren't recording anyway. So I recorded everything. So you don't have the video displays, but you've got the audio basically. So then you take that and then you put it into Descript, which is an online system that then puts it all into so you get all the written part of it. So it basically turns it all into into words. Why is it there were Robert conclusion as example, and then you put it into Chat GPT. And this is the only reason I'm showing you this whole thing is it's not quite as simple as just chuck it in Chat GPT and it all works. And then you got to be able to ask all the right questions and everything else. But back to your thing around the brain, Alex, what I found absolutely amazing is I went and did it. I put all the transcription there. So that was probably 4 hours plus the dinner afterwards, at least 5.5 hours worth of content. And I put it all in and I said to ChatGPT, don't do anything until I've uploaded it all, which I did. And then from there, I was like, right now, create a synopsis, create a action list, all of that type of stuff. And also don't try and do it just within 2 pages. Like put down as much as you need so that the content could be there. And then last night, I only finished at 1:30 last night because I wanted to be ready for tonight. Was I then read through everything and then I went back to all my notes because again, anyone who's ever got notes from me knows that I make lots of notes. And so I just made sure if there was anything that was important to me that wasn't covered, I could put it in. So I think it's a fairly thorough review of everything Robert Kiyosaki said. And then Joe, you got your headset on there, dude. So but yeah, so that's kind of where we're at. And why I did it was not only for everyone here, but also for my own well-being, because he shared some really valuable things. And I was really interested in it. So what I want to share with you is let's go through it. Now, I don't quite know how to do this because I don't really see the point of reading it word for word, but let's go through it in terms of like the key points here. So One of the things that I found amazing was I mean, we know that he challenges the conventional thinking around money, debt, central banks, and education, arguing that the system is rigged to keep the middle class poor and dependent. Kiyosaki emphasizes the importance of increasing financial intelligence, mastering the four intelligence: mental, physical, emotional, and spiritual, and shifting from working for money to making money work for you. Using his cash flow game and his real life investment strategies, he reveals how to escape the rat race through real assets: business, real estate, commodities, and tax advantage debt. With inflation rising, AI disrupting jobs, and the dollar collapsing, his advice is urgent: learn the rules of capitalism or be crushed by them. The world economy is collapsing, and you better be prepared. So I'm just going to start with that because I think that's quite relevant. I was quite surprised by how opinionated he was, and he had no problem being very, very direct around, the education system and the government, and the fact that the Federal Reserve is communist, et cetera, et cetera, et cetera. Okay. At any point, if anyone's got any questions or comments, just raise your hand, type in the chat box, whatever suits you, basically. Okay, some of the key takeaways. Money is fake. Fiat currency is not wealth, it is printed paper. He went into the whole Nixon thing. I'm sure most of you have heard of it, the Nixon thing, and taking them off the gold standard and all of that. Real wealth lies in real assets like gold, silver, and real estate. Just by the way, he spoke a lot about Bitcoin as well, which I'm surprised didn't come up here. And I should probably add it. As they print money, the rich get richer. The American economy is printing $1 trillion in debt every 100 days, and the crash is coming. I found that an astounding number. So when you go and look at it, the American debt, he said $32 trillion. When I looked at it last night, they said $35 trillion. But just take like every 100 days, an extra $1 trillion is being added to that. That's astounding. The cash flow quadrant is real life. So move from the employee, self-employed, to the business owner, investor if you want financial freedom. And what he basically said is, in real life, if you play with real money and you make mistakes, you lose. Whereas, the whole cash flow quadrant game. Just by the way, has everyone seen cash flow quadrant? Like, do you know what I'm talking about when I say cash flow quadrant? So I actually own a copy of this game here in my at my house, and I try to play with my son. Oh, that's not the game. I tried to play with my son, and he was too young. Although there's now this online version. But anyway, there's a picture of cash flow quadrant. Oh, no, this is the online one again. Just so I can see there. Hello, yes, no, yes. Okay. So here's the game cash flow quadrant. And yeah, it's really interesting. I want to kind of get a picture of the board game for you just to show you. Yeah, well, this is what I was looking for. So if you look here, so you basically start over here and you go around here, and it's quite interesting because you've got budgeting, you've got doodads, which is where you buy stuff that you don't want, but you have to pay for it, like anyway. You've got your car breaking down and whatever. And the whole idea is you have to get out of this rat race to be able to, and in simple terms, the way to get out of the rat race is that your passive income has to be higher than your expenses. And then once you get to this outside, this is where you can start to kind of do proper things like real estate and business and everything in between, in terms of the process. So the average game kind of takes 4 to 5 hours, depending on how people know. But yeah, it's really interesting. And as I said, we played on Saturday night, and I didn't know this, but there's an online game, which is why I've been trying to say to people, if you want to play, like, we could actually facilitate games. So it's 6 people at a time. And obviously they can be anywhere in the world, in terms of that process. Okay, number 3, the system is rigged. Central banks, taxation, and school system are designed to keep people poor. Don't play their game, learn to outsmart it. Use debt, don't fear it. Rich people use debt to grow wealth and avoid taxes. Debt can be a tool, not a trap. if used for income producing assets. I think that's the most important part, the income producing assets. So often people buy houses and they say that, particularly in South Africa, same in Australia, Canada, where they buy houses, but the house actually costs them money. Like that's not an income producing asset. And then debt is not a good tool in terms of that process. But what I did find really interesting here, and Alex, this is specifically for you if you haven't heard this before, he wanted to own a Ferrari. Now, where most people go out and buy a Ferrari and be in debt, he was like, no, I have to make enough money that my passive income pays for the Ferrari so that I get the Ferrari for free. So the mindset is, how do I grow assets to build passive income? And then once I got the passive income, I can have the Ferrari, not what most people do, which is just go and buy the Ferrari. So that's quite interesting. Crashes, opportunities. Wealth is being built during economic crashes. The middle class panics. The rich buy cheap assets. Train with fake money. So I kind of already said this. Learn by playing the cash flow game. Make mistakes in a safe environment to build financial intelligence. Invest micro, think macro. So I'm going to go into this in a bit more detail just now. But you can't control the global economy, but you can control your own investments. Own assets that produce income and appreciate. Yeah, the difference between fundamental analysis and technical. Just before I go any further. So I must admit, I thought I knew quite a lot. Who here knows the difference between fundamental analysis and technical analysis? I'm interested to see if I was the only one that didn't know. I'd never heard of this, by the way.
Yep, I do know.
I'd like to give it a go. Isn't it the technical analysis is the trends and wave patterns in the markets, and fundamental analysis is the actual movements of capital markets? Something similar to that?
So if I was your school teacher, I'd give you 5 out of 10. Rael, you got your hand up. Do you know what it is? Nirvana says she does. Helga says he does. Shoal says, I assume Shoal says Shoal and Archie say they do. Rael, have you got your hand up? Archie, you got your hand up?
Yep. Hi, Scott. So fundamental analysis, as I understand it, is things like the balance sheet of a company. So it's profits, earnings, revenue, earnings per share, so all of those numbers. And the technical analysis, as Alex said, is basically price action. So when you look at a chart, you see how price changes over time.
Well done, Archie. You get 10 out of 10. Alex got 5, you got 10. So Alex, you got the technical part. You got the technical part right, but the fundamental part is exactly what Archie said. So you got your basic financial statement, income and expenses, and balance sheet assets and liabilities. And what I found really interesting, I'm just going to go into more detail here because this was I'd never heard of this before, by the way, until whenever Saturday or whatever. So fundamental analysis focuses on the financial foundation of investment. It involves examining tangible metrics and financial statements such as income, expenses, assets, and liabilities to evaluate the intrinsic value of a business or investment. It answers the question, what is it really worth? Core tools include income statement, balance sheet, and cash flow statements. It evaluates long-term viability, profitability, growth potential, and sustainability. In personal finance, this means understanding your own income versus expenses, cash flow, and your assets, liabilities, net worth. For investors, it's about evaluating the health of a business and a sector. So just to remind everyone, that's what this is on the left-hand side. And Robert Kiyosaki said, look, he doesn't tend to play in this technical analysis. He's always like the fundamental basis because it's based on actual numbers. The technical analysis, by contrast, is focused on market behavior, sentiment, and price movement. So this is what James Painter and others teach. It interprets price charts, volume patterns, and indicators to predict future movements based on not on what something is worth, but how people feel about it. It answers the question, where is this going next, based on past behavior. It uses charts, candlestick patterns, moving averages, support resistance, and indicators like RSI and MACD. In the short term, focused and assumed all fundamental information is already reflected in price. In essence, it's the study of market psychology trying to measure greed, fear, and momentum. And then in summary, so your focus, so you can see here fundamental and technical. So your focus is financial health and intrinsic value, whereas on this side, it's price movement to market sentiment. The tools here, financial statements and ratios. The tools here, charts, indicators, and patterns. the purpose, identify undervalued assets, and here time entries and exits. Here time horizon long-term, technical analysis short to medium term, and then analogy measuring your personal budget and net worth, and then technical is reading your mood swings through heart rate monitor. And then finally, why this matters for investors, Robert Kiyosaki teaches that both types of analysis are essential. Fundamentals tell you what to buy, strong income producing asset. Technical helps you decide when to buy or sell based on market emotion and timing. Master both to become smart, strategic investor who makes the right decisions on logic and insight, not on emotions and hype. So yeah, I added that whole extra section because I found this fascinating. And if I go back to the highlights here, you can see the fundamentals are about income and expenses, assets and liabilities. It's all about the numbers. And the technical is about pictures and charts, and it's all about the emotion. So the two big words there that I wrote down in my notes were numbers and emotion. Yep. Does this make sense? Did I get it right, Nirvana? If you know how it works. I see you got your hand up. I don't know if you want to talk.
Yeah, you did get it right. But I think the one thing that we should add to this is when we talk about the fundamental analysis, the management and executive teams of those listed companies are also quite important. So it's not just the balance sheets of the companies and their financial ratios. So that's one of the important things. And then on the technical side, the reason why that's important is that just a general statement is that you would buy in a long-term upward trend market. And then you would look at your intraday and your weekly to home in on exactly when to buy. Because in an upward trend market, you can either buy coming down or you can buy going up. So I think that's the additional things that I just wanted to say there. Thanks.
Perfect. And I think if I go back to this summary or whatever it was, table down the bottom here, one of the reasons why I know for me that I prefer fundamental is I like to do assets that are long term. I've never really liked short term stuff. It doesn't make it wrong. So one of the things that Robert went on and on about is that there's different ways of doing stuff, and you've got to find your way. I've always liked long term stuff, business, real estate, whatever. Whereas obviously some people thrive on day trading and crypto trading and whatever. And there's nothing wrong with that. It's a different animal, different beast in terms of that process. So anyway, thanks for sharing. Then the number 9 was seekers are the ones who escape the rat race and get rich. The moment you make a decision to learn, to seek answers, to invest in your financial education, you begin your journey out of the rat race. So I think this is something that hopefully all of us are already part of it. I mean, we're part of the mastermind. We're all avid learners, etc. But he went on and on and on about how the future was for seekers. Seekers are the ones that get rich, etc. So much so that I actually Googled it. Well, I didn't Google it. Sorry, I used ChatGPT to literally ask him what his feeling was on seekers. Seekers and financial education. Because I wanted to see what it was all about. And so, yeah, if you look here, seekers are the ones who escape the rat race. Seekers value financial education. Seekers know that being rich is a mindset shift. Seekers become investors or business owners, B and I quadrant. Seekers must be aware of false gurus. Kiyosaki on the internal journey of a seeker, move from fear to courage, move from security to freedom, trade comfort for possibility, and replace dependency for empowerment. I quite like that, actually. I'm actually going to add that to my summary.
So, Scott, just to understand what you mean there, so seekers is a group of people or a classification of a group of people?
Yeah, it's basically all of us. Like we're saying, right, we want to learn more about financial education, how the system works. We want to understand how like the family office works and all that type of stuff. I would say everyone here is a seeker, quite frankly, if you want my honest opinion. And I was doing this late last night, but I actually quite like what I've just read there, and I want to add that to the synopsis down the bottom here. I think this would be very valuable, basically. So anyway, I will do it afterwards. But I just, I think what was there was great. Okay, let me come back to what we were. Okay, and then this was the part I was telling you about. So find your way. Sorry, Alex, did I answer your question in terms of, I mean, that's why I liked when I Googled, sorry, I keep saying Googled, when I chat GPT'd what does Robert Kiyosaki say about seekers? And I actually made a mistake last night because I only took that part. I didn't realize there was a whole bunch more in terms of seeker value, financial education. You can see, question the system, read financial books, take courses and avoid seminars, attend seminars, learn how money actually works. He sees this trait as essential to becoming rich. Seekers know that being rich is a mindset shift. It's not the money, it's the mindset. Poor people blame, rich people seek answers. Seekers are humble enough to say, I don't know, but I want to learn. All of us that are in the mastermind. They stay curious and open-minded. That's what leads them to opportunities others miss. Seekers become investors or business owners, B&I. Kiyosaki's cash flow quadrant shows that the path to the employee and self-employed side to the business owner and I side starts with seeking partners, seeking knowledge, seeking mentors, seeking cash flow assets. Just by the way, look at our paid framework. It's partners. I mean, knowledge is information. Mentors we don't have, and then cash flowing assets would be access to assets. Quite interesting. Seekers must be aware of false gurus. One of his key warnings is that seekers are vulnerable to hype and scams if they aren't grounded in financial education. He urges people to ask, what's the teacher's real life experience, and do they make money teaching or from what they teach? In other words, he encourages wise seeking, not blind following. And then Kiyosaki on the internal journey. Seekers are going through a transformation. They move from fear to courage, move from security to freedom, trade comfort for possibility, and replace dependency with empowerment. This mirrors his own journey from working for Xerox to becoming a real estate investor and best-selling author. In summary, Kiyosaki sees seekers as heroes of the financial freedom journey. They're not defined by what they have now, but what they choose to pursue. If you're creating a workbook, presentation, or community framework, you could structure seekers as the seeker mindset, question everything, learn relentlessly, and take bold action. I like that. I agree with you, Marina. I really, really like that. Archie says she also resonates with it. I think a lot of us can in terms of that. And I honestly believe all of us are seekers. Otherwise, we wouldn't be part of this mastermind. Scott, did you also capture the other speakers? I'm interested to hear what Sandy Jadeza said, as he's a trader and talks about creating your own economy. I did, Archie. How much are people going to pay me to summarize all the different speakers? Because I have all of them. Anyway.
Come on, Scott. You didn't do that. Chat GPT or your AI did that after the Saturday's meeting. So
yeah, but Jeff, someone had to be smart enough to record it to start off with.
okay, you get 10 out of 10 for that one.
Well, to be honest, I actually got shat on. I properly shat on for recording it on my camera. And I've got it here. I recorded the one I was going to show you guys this morning, but then I thought, nah, it's probably better that no one knows I actually have it. Let me just see which ones I've got here for you, Archie. I've got okay, so I've got Robin, which is Robin Banks. I've got Andrew, which is the Sapin guy. I've got Paul, which is the Bitcoin billionaire. I got Paul O'Mahony. I got Sandy. Yeah, I don't have JT. But there's nothing to learn from JT other than the fact he hangs around wealthy people and likes to show you 2.5 hours of pictures of it.
Yeah, that's what I felt about him. Like whenever I've seen his stuff, it just hasn't resonated. It's a bit like, rich propaganda.
Marina, it's funny you say that. A couple of things that I find interesting. So the first one is that when he first came to South Africa in 2012, 2013, I was in the room and he came in with like a camera crew.
Right.
There was a picture of him with Donald Trump. I was like, who the hell is this like? I need to get close to this guy. So I paid 60,000 Rand in those days, which was 10% of 600,000 Rand, because that's what I was signing up for. And anyway, and I know how it works, because I bought into and I ran to the back of the room and I paid my 60,000 Rand. And luckily I did a payment plan, because I know lots of people that didn't.
Did he tell you that you would be like you're being a loser if you didn't run to the front of the room.
No, all of that stuff. Look, I'm not here to have a JT bashing session, but the part that I find most interesting from doing these presentations is that they all show their fancy lives and the fact they travel and all that sort of stuff. And so anyway, with a bit of kicking and screaming, I've managed to put in 2 slides, literally 2 slides about where I live and holidays and whatever. And I'm like so embarrassed when I get to those 2 slides. He literally has no qualms for 2.5 hours to tell people who he hangs out with, how clever he is, blah, blah, blah. But it works. He sold more product than anyone else that weekend. So, yeah. Right. And then this one I found really interesting. So find your way. All of us have a mission and a job to do. When you find your purpose, your angels will appear. So he was talking about how he actually built Cash Flow Quadrant and no one cared. And then he actually met these guys from Success Resources, and they started doing events. And then that's how sort of cash flow, most people don't know this, including me, that Cash Flow Quadrant actually came before Rich Dad Poor Dad. And then because it was finding so hard for people to actually play the game, that he wrote the book. And the book has been the single best in the personal finance space, been the #1 seller for however many years, 30 years or something. And You Can Do Magic. And then for the parents out there, one that I really enjoyed was the question I asked and a couple of other people asked, is what do we do for our children? Like, you're basically saying that the schooling system is completely useless. And it was quite interesting, his response, along with this Find Your Magic. He pretty much said, listen to your children, they'll tell you what they want to do. Like, they'll tell you what they want to learn. It's quite interesting. Okay, action points for investors. Play the cash flow game at least 10 times. Treat it as a practical training. Audit your current. So everyone who has played, I'd like to know if has anyone played 10 times? Okay. So quite an interesting story. There's a guy called Marina's 5. There's a guy that runs this for the Rich Dad group. He's facilitated over something ridiculous, like 300,000 games or something. I don't know the story. And he's from Singapore, and he was looking after. So his parents died, and he had to look after his younger siblings. He was 30. He was in debt and all this sort of stuff. And he started playing Cash Flow Quadrant. And within, I stand to be corrected, but I think he said 7 years. Within 7 years, he was financially free. And then subsequently went on to teach all his cousins and his uncles, and they all became financially free. And then literally he was like, right, we need to do this properly, basically. So Nirvana, you went today to go to the physical game. I know in Joburg they were playing a physical game. Is that correct? Do you want to?
Yes, that's correct.
Stop sharing and you just share your experience, basically, if you don't mind.
Yeah, so today Abu also facilitated it, and he's doing that tomorrow. So today was more of a practice session for tomorrow, where he went through the game and we played a few rounds. So obviously, the more players you have, the longer it takes. And if you don't understand the rules of the game, it can take even longer. But I think it's quite a nice game to identify your mindsets and your emotion around money, because it's what you choose. Because you have, as you said, the doodads, which is unforeseen expenses that you have to pay, and then you have the rat race, which is like that hamster wheel in the middle of the game. And the whole aim of the game is, as you said earlier, for your passive income to be more than your expenses. So as you move from that quadrant, then you actually get onto that, the bigger part of the board, as you can see, around that. So that is where people who are business people or investors play. So whereas the wheel itself, you rely on a pay slip. The other places, at the top of the board, is where you actually have inflows of money because of your investments. So I think it's like 100-fold increase in your passive income, well, just for the game itself. But I think the teachings of the game itself, it's quite simple but quite potent at the same time, because it's just little things on how to get into the passive income that are quite powerful.
Yeah, and so on that note,
But but you need the 10 rounds. You definitely need the 10 rounds for it to make any sense, or playing the game 10 times.
no, again, I've owned the game, and I mean, I've even thought about doing it at a wealth weekend or whatever, and then I kind of think to myself, people don't want to come all the way to sit around playing a game. I didn't know there was an online version, so there's actually an online version which is free, and that's what I tried to say on the weekend when I said, who's played it, and would you like to play online? So, like Marina, you said we should play. There's nothing stopping. It doesn't have to be a big organized, facilitated thing, but there's no reason why we couldn't, create a mini meetup, and you can only play with 6 people. So, I mean, if there's 6 or more, then we'd have to create 2 games. But yeah, I'm just pointing out that it's here, it's available, it's free. All you need is players. Oh, and by the way, you can even play against yourself. So if you've got no friends, you can play against yourself. Caroline, I'm loving the view of the wine. I'm very jealous, to be honest. My mate was here, and like, you're sitting in the jacuzzi drinking Castle Light. I was like, shit, like, I could so love that Castle Light. Okay, so they were the sort of the 10 key takeaways that I kind of had. For the action points, okay, I've said that the 10 times. Audit your current assets. Are they real or paper? Accumulate real assets, gold, silver, real estate, business. Okay, I must make a change there because I must add Bitcoin. He went on and on and on about Bitcoin as well. Learn how to use debt strategically, not for liabilities. Partner with smart tax advisors to maximize legal tax reduction. Track the macro environment, but manage your investments in the micro. So just by the way, back to this thing, he referred to this as your micro. Like, this is your financial statements, your income, your expenses, your assets, your liabilities. And that's your micro. And then the macro is obviously what's happening in the world. And he pretty much said, like, you're much more in control of your micro than you are your macro. There's not a lot you can do to change the macro. Prepare for the crash, have liquidity and a game plan. He went on and on and on. I know he's been going on about this for years, but he's adamant that we're actually in the middle of the crash. It's not even happening or coming. It's already happening. Just by the way, I don't know if it's going to come up a bit later, but he spoke a lot about how the American economy, and specifically the US dollar, is being propped up by America being able to sell bonds. For the record, I've heard this in 2 other podcasts as well. And when they did this whole thing, I shared that podcast with all of you. Judy was actually asking for it. And it was the Greek financial minister that did the podcast. And there was an opportunity for an IPO in Hong Kong, and the American government wouldn't let any of the big banks invest in it, JP Morgan and a whole bunch of the others. And then straight after that, and that was like about 2 months ago, China just stopped buying American bonds. And for the first time in like 50 years, there's been what's it called? An oversupply. So there's more supply than there is demand, which meant the bonds were dropping. And without the bonds, the American reserve currency doesn't work because they can't print money. And that caused the overnight change around the tariffs and a whole bunch of other things. So, yeah, I probably should have asked Anthony that today, but that was my understanding of what he said. Read or reread Rich Dad, Poor Dad, Cash Flow Quadrant, and Fake. Fake's his latest book that's come out, by the way. I haven't read that, but I would like to. And then join communities of like-minded investors who think globally and act financially. Hey, that's pretty cool. Okay, detailed breakdown. So the 4, just by the record, is this valuable to you? Yeah, I know in some cases it's 101 stuff, but often it's great to reinforce the stuff. The 4 intelligences. Robert opened by stating that true success requires integrating 4 intelligence. You got mental, which is financial education, strategic thinking. Physical, which is energy, health, endurance. Emotional, which is resilience, managing, feed, gear. And spiritual, purpose, mission, why behind the wealth. He basically said when you're at school, you're only taught mental. And he said, because we're in such turbulent times, the one that is most important is spiritual. Okay. This is the stuff I'm telling you, which is behind the behind the summary. He believes traditional education ignores all but the mental, and even that is flawed because it teaches obedience, not wisdom. Okay, the cash flow game is a learning tool. It stimulates life emotionally and financially, teaches people how to handle risk, money, opportunity, and failure. Kiyosaki insists play 10 times what happens on the board will happen in real life. And this is experimental learning that replaces outdated schooling. So as an example for me, I don't know if it's a little bit, my son's right here. I don't know if it's above 13 yet, but I definitely want to start playing with him. I've got the board game here at my house. Fiat money. I just want to see if anyone's got any questions or comments, just fire away. Fiat money in the central bank system. So money today is debt. Since 1971, Nixon took us off the dollar off the gold standard. All currencies became fake. Central banks like the Fed are not federal. They have no reserves and are private institutions. They print money and create inflation, which benefits the wealthy. They own assets and hurts the middle class. Central banks are Marxist. America was founded as a tax-free nation. Now we are tax income to pay for fiat debt. Just by the way, I'd never heard him say this before. Firstly, do you agree with this? And secondly, does this make sense? So basically what he said is that ever since they started taxation in 1912, they started taxation in the same year that they started inflation. And the whole logic was that to allow for inflation, you have to have taxation. From the middle class. No one's saying yes or no. So you either I can tell you one thing, Robert is not woke. That I can promise you. He has absolutely no hassle in speaking his opinion, whether it's right or wrong. Who knows? Okay, real assets versus paper assets. Kiyosaki teaches that the assets fall into 4 categories. By the way, this is also in order. So business is number 1, scalable cash flowing companies. By the way, he says every business owner, your job is to start a business, make money, and then to buy real estate. And then with real estate, you use depreciation, leverage, and tax. And so the whole idea is that the business pays for the real estate. Paper assets, he was very derogatory about paper assets, unless it was his company. He did launch a company and take it to IPO. And he basically said, along the lines of it's all a load of shit, but at least if you create the shit, you can benefit from it. So, he discounts this one big time. And then you got commodities, gold, silver, oil, Bitcoin, protection against inflation. And what was quite interesting is he said, you start businesses, you invest in real estate so that you can scale and use debt. But ultimately, it's all about coming back to commodities. Everything should be back to commodities and owning commodities. I don't like anything they can print. I like things God makes, gold, silver, oil, etc. Okay, taxation and depreciation strategies. Wealthy investors use depreciation and amortization to reduce taxes. An example, buy $10 million of real estate, depreciation at 10% equals a $1 million tax write-off, which, by the way, you then use against the business income that he's discussed. Combined with leverage, debt, and cost segregation, and you basically end up paying 0% in tax. He warns, you better have a great accountant and attorney, push the law, stay legal, but push it. Just as a matter of interest, what do you think his passive income is per month? Anyone want to guess?
$250,000.
$250. Is that what you said, Jeff?
That's a number I got. Maybe it didn't. No, I caught 250,000. That's a number in my head.
Alex says 25. Anyone else want to guess? I'm just interested.
It was 250.
Yeah.
I forget what people say, Scott, but I never forget what somebody says about money. Okay.
Yeah, Jeff and I can have a debate on it. I remember 200,000. I can go back and listen to my recording, but either way,
okay,
200.
So I'm close.
200, 250. Yeah, you're on or around. That's quite a lot of money per month if you think about it. Passively, it's pretty impressive. Okay, he's got 15,000 apartments. So when you know how we invest in multifamily, 3 hotels. Yeah, that are doing all that cash flow. How do you use debt to create wealth? Debt becomes wealth when it's used to buy appreciating income-producing assets. Example, he bought gold at 300. Now it's 3,500. He used the profit to buy a house. for 4.5 million. His cost was 450. So what he was basically trying to say here was when he bought the gold, it's the amount of money he needed was $450,000. The house is now worth $4.5 million, but it's only really costing him $450,000 worth of gold. And the only reason the house has gone to 4.5 million is because it's devaluing against gold. So he said gold hasn't gone up. It's just the dollar's gone down. So, there, it went on to say that just below that. At least not gold went up. It's just the dollar went down. The rich don't work for money. They use money to buy assets that produce more money. Okay, the power of appreciation plus refinance equals tax-free wealth. So you buy real estate for 1 million, you let it appreciate to 2 million because of inflation and scarcity. You refinance at 1 million, take the cash out, pay no tax. You didn't sell, so there's no capital gains. This is how the wealthy borrow from their own equity tax-free. Why the middle class is getting destroyed? Rising unemployment, AI replacing jobs, rising healthcare costs, bankruptcy, especially in retirement, printing money, higher asset prices equals housing crisis, and lack of financial education equals dependence. The old guys are the number one cause of bankruptcy in America because of medical bills. So he was going on about what a massive impact medical is actually having. And then macro versus micro, I think we've kind of covered this, but just to do the summation. So macro is the geopolitical risks, central bank corruption, digital currency transition. It's obviously everything that Clem Santa talks about. It's everything that Anthony even kind of takes us through, like he did this morning. Micro is your income, your assets, your tax strategy, and your education. You can't stop the Fed, but you can decide what you do with your next dollar. The fundamental versus technical analysis, we've done that. And then the real estate cruise, which I told you about this morning. I'm still waiting for more details on that, and why teachers, why attend the Investor Summit and buyers trips. The more you teach, the more you learn. So again, I always thank people for the gift you're giving me. By teaching you, I'm reinforcing what I learned. Surrounded by experts, so you need to be surrounded by experts in real estate, gold, crypto, and macroeconomics, and then encourage the students to travel, learn, and play the game in the real world. And that's why he was saying to the people who were there, why would you not get on an airplane and come over and meet the best in America? And as I told you, he told me personally, he literally came up to me personally and said, you have to be on this trip. It's where the best are going to be in America. So yeah. And then conclusion, learn the game will be played. Kiyosaki's message is clear. The rules have changed. Schools won't teach you. Politicians won't protect you. If you don't take charge of your financial education, you'll be crushed by the very system you trust. Play the cash flow game, buy real assets, use debt, avoid taxes, prepare for the crash, and above all, become a teacher. Thanks. So there's your synopsis. Jeff, you were in the room. Nirvana, you were in the room. What did I forget or that needs to be added to or anything that you disagree with? Because again, I'd love to crowdsource or crowd collaborate or whatever this document as a summation.
Yeah, so I spoke to Abu again today, just and obviously discussed the stuff about the gold more. So he says that Singapore, I think everybody knows, is one of the most successful countries, despite having nothing unique about it, no natural resources or anything. But their entire reserve is backed by gold, unlike the US. So that's literally one of the strong points about holding gold. So I think, I'm not sure if you covered it briefly, but what Kiyosaki said is that he uses obviously the equity out of his mortgages from the various companies to buy the real estate. Thus, he doesn't pay any tax because it's bank money. And then takes that money and buys gold, silver, and oil companies. So that's literally what he said. Because it's the value, and as you correctly pointed out, it's the value of the dollar that's up and down. The commodities itself hold the value. So it's basically, how do you should have some of your stuff obviously in gold. You should have some in like more risky things like Bitcoin, stocks, or any other risky assets that you can come across. So there should be like foundational assets, risky assets, but at no point should you be holding anything in cash. I think that's the bottom line that he has. And if you are using cash, it's not your cash; it's technically the bank's money that you're using.
Yeah.
Yeah, I can't think of anything else. Maybe Jeff, if Jeff's seen anything else.
Jeff, just before we go to you, I just want to reiterate what you just said there, Nirvana, which I was trying to say earlier as well, which was my two biggest takeaways were that fundamental analysis versus the technical analysis, and also how you spoke about micro macro. And the second one was this cascading, and I don't quite know how to put this in the document, but how this cascades. So you make money in business, you invest in real estate, and use things like leverage and tax and all that. And then he pretty much skips paper assets, and then he buys commodities. And he must have said it at least 3 times, including at the dinner, that the whole aim is to get back to commodities. But the fact that businesses create money, real estate helps you leverage that money so you can go a lot quicker. But the aim is to buy commodities. Jeff, anything from your side that stood out that we haven't covered?
Yeah, look, I came in a bit late. Sorry, I was finishing off another meeting before I could get into this one. Scott, and is this just on Kiyosaki's side or generally the whole day as a whole?
No, so this was there were the 4 sessions from him. So this is all made. I just took what he said and did it basically. I don't have all the. I mean, I've got all the other speakers, but I didn't try to put them all into one document. So yeah, I mean, if you want to give other further feedback, all feedbacks would be appreciated, Jim.
Yeah, I just think there were some nuggets that came out of there. Whether I still have, being a 5, I still have to analyze them in my head to make sure that there's substance to them. But a client at Paul, his name is Paul, hey, the guy who wrote Mr.
The Bitcoin millionaire, yeah.
Yeah, saying investing where the world is going and not where it came from. That was quite an insightful statement. It makes me think. Needed to wrap your mind around that because it's true. That's where the wealth will come. But I summed it up in 3 things that I got out of it, and it was AI, heck of a lot around AI, Bitcoin. I have to go and speak to Anthony because I don't have 1 cent in Bitcoin, so and it's going to $1 million according to some people. So we're still not too late. And then I really enjoyed Sandy. Quite. I enjoy simple things. I enjoy simplifying things, which is what I do so that I can understand them. And, to simplify, I know there's a heck of a lot more behind it to get it right exactly, but to simplify trading, to say, can you see the difference between red and red and green? And that's what you need to know first and foremost about trading, which I never ever summed up trading in those simple terms. So coming a bit back to the fact that I'm not good at that. Fortunately, I live in a state where one guy is actually very, very good at that. It's something I want to look at just to keep sharp and have a look at it. I did options trading and I wasn't very good at it. So no, not other than. And by the way, Scott, your summary there is brilliant. You got far more out of Kiyosaki's talk by summarizing it like that than I would have ever got out of him because I got sidetracked with these stories about shooting oaks in Vietnam and all the rest of it, and then forgot what the real message was. And his helicopter pilot days, but yeah, there were nuggets when you put it together like you did. Yeah, and I think it's a flipping good summary of his side of the day. In any case, there was a lot of what I call rah stuff from some of the other speakers. I quite agree with you. We especially the Australian, they kept shouting at me to jump up and down and get excited, and all I wanted to know was his flipping message that he was going to give me. I mean, who the hell gets excited about an Australian anyway? They can't even play rugby. So,
be careful. Caroline's here, and she's not sure which way she is anymore.
Yeah. No, I think Jane was with me. She sort of summed up. She said these guys that have got an American background to their presentation, sometimes you get lost in the jumping up and down and waving your arms instead of getting the message. But it was actually brilliant. It opens your eyes and shows you a different world out there and people's other perspectives and where we're going. But as I said, it really, and the Bitcoin story, because we've always looked at it, and I liked in Paul's story, it said, I told you back in 2013, and if you'd bought it then for $1,000, you'd be a multimillionaire now. So, how many of you did when you were told to do it? And it's always a lesson in life, if you stand back and the opportunity goes, the window opens and closes, and it's too late once it's closed. So it's also difficult when you jump before thinking, also because you forget to put your parachute on. But yeah, it was good for me.
He had an interesting exercise that I enjoyed. I'd love to do it if we were in a live room now, but I don't know how to do it in the digital room. But he basically went like, when did you hear about Bitcoin? Okay. Like, if the first time you heard about it was 22, sit down. If the first time you heard about it was 2021, sit down. If the first time you heard about it was 22, you get the point. He gets to 2017, he goes, well, you all should be millionaires. Or all of you, every single one of you should be a millionaire. Okay. And then he keeps going, and I think he got to, because I heard about it in 2013, and
Yeah.
I think he stopped at either 2013 or 2012, but anyway, around there. And it was funny watching. Well, I actually found it really interesting watching how many people, had how many few people had heard about it by like 2017. It was quite interesting actually for me personally.
I think the other one as well is what I was teasing you about. Did you get your AI to write the story? Because I mean, you're wasting your time if you're doing it yourself. So, in terms of what he said about his accounting, which from my background in that sort of game of saying, the email comes in from Gmail, it's got an invoice on, and then AI picks it up and orders it and says, "Do you want to pay it?" And then sends it off to the bank for payment, or sends it to the accounting program to be pulled into accounting without anybody intervening in the interim, which is a fascinating real life story of what AI is going to do to certain sectors of our employment in the world and in this country. It was very, very interesting.
Well, yeah, Alan.
I might be out of line again. You must just tell me. You my last stop now in life and investing.
Come on, Alan. There's lots more runway on this highway.
Yes, hold on. Okay, you my last stop. You know my story. I've been around to all investors and whatever, and I've shared with you. And you've basically agreed they know nothing, and we know nothing. With you having gone to this thing in Joburg and you spoke there, you did brilliantly the one night, etc., ABCD, are you able, which I'm sure you are able, to sit down and take what you've picked up there and the new trends, and obviously the whole thing is how to make money and to get wealthy, and to take it into your business that you run and put a thing together, or will teach us how to make money with all these latest things. Like my colleague there was speaking about Bitcoin. I've been with you, I think, since November or whatever. I've never heard us once discuss Bitcoin. So have I got to go out and find some other animal now to teach me about Bitcoin? Because I agree with what was said. All we can be told is, well, I don't know, in the next couple of years or something, Bitcoin's going to be $1 million and all this, and no one's buying Bitcoin. It's because we don't really know everything. We are learners. So the question is, are you able to take us through this whole investment strategy of obviously having investments, shares or whatever, like Bitcoins, we're doing property and all that. I've picked that all up from you. And to have a structured setup.
So look,
I think you're the only person I think can do it.
Yeah, no, thank you.
You've got all the information. You've been there you've come back and you've taken notes like you can't believe how you've got them. And we get taught this program from A to Z.
Yeah.
And that's what I think my question is. It would be fantastic. My last stop on life.
Alan, I think I'd answer that in a couple of different ways. So the one is that obviously with how powerful AI is getting, I mean, I think it's phenomenal that you can go to an event for 2 days. And admittedly, I've only picked on one speaker so far. But as Archie's already pointed out, I have all the other speakers. So, and it's incredible how you can put it in and summarize it. And I still read through it. I think it's important to read through it. And because some stuff might be, I always say it's about 95% right. And you just got to kind of make sure that it's right.
No, sure.
But anyway, my point being is that it actually is. And I was actually sitting there, actually contemplating, I can't believe I'm saying this, but thinking to myself, it's time for the second book, actually. So anyway, so that was going through my head. The second way I would answer that is that what we have tried to do through the mastermind, and we're probably getting to the point now of repeating these. But like as an example, we brought in these guys, Clint O'Brien. So by the way, he actually does gold and silver for Calio. But interesting enough, I didn't meet him through Calio. I met him through other people I know, like, and trust. And then subsequently found out that Calio used him as well. But basically, so they're, people want to learn about gold. So sorry, let me just show people where I was there. So I'm in Private Wealth Global, and I went down to Asset Class Mastery, and we've got gold and silver. If you want crypto, we did that as well in terms of it, and we went through it, etc. So I think to answer your question, Alan, it is there. But what's important though is things like crypto, as an example, or even gold and silver. Like the fundamentals are there, and we can learn the fundamentals. But actually, probably every 12 months, maybe 12 to 18 months, we need to redo them because the markets change and things change.
No, sure, I agree.
And then the third thing I would say is that around Bitcoin, if you haven't watched, which I would strongly recommend everyone does watch, is this here. Where's it gone now? Which is the thing we did with James Painter in January, and I think you were there, Alan, in January here. So this one here with the global market forecast. So this was the one that was done by James Painter, and this was fascinating. I mean, like where he thought not only commodities but the stock market, but he also went into cryptocurrency, he went into Bitcoin, he went into XRP, etc. So yeah, you can, I mean, if you want to, you can go watch the recording here. Now with James, he's the sort of guy that I try and bring back every sort of 6 to 12 months because, it's more longer term forecasts that are important. But I mean, he had some astounding predictions on where Bitcoin and some of the other cryptos were going. And the thing, I mean, I followed him. I mean, he wrote chapter 2 of my book in 2013. I followed him for a long time. And I mean, he's very much on that technical analysis. And I've been astounded how like Bitcoin went over $65,000. And then he told everyone it would go back to below 3,000, and it did. And I literally thought the guy had lost his marbles, and then it did. And then he said it will go over 100, and it did. I mean, I've watched this happen multiple times, and it's that whole sentiment, technical analysis, all of that. I didn't know the fancy word for technical analysis, but I think Alan, your point is very valid, and especially if we don't do it ourselves, there's no reason why we can't bring in people that do it. And not everything's for everyone, but it allows people to at least get access to, so that you're not dealing with charlatans. I think that's one of the things Robert Kiyosaki said is that he spends so much time trying to make sure that the teachers actually are teaching. Oh, John, you were there as well. We need your feedback as well. But spend so much time just vetting the teachers and making sure that they actually are real teachers. Which I think is important. And I mean, to put in perspective, I've applied to speak at Success Resources for 6 years. 6 years. And I finally got a chance. And even then, I only got 20 minutes. So, yeah. But I think, Alan, your point is taken. And, and again, Jeff, thank you for the kind words. I find it astounding. 6 months ago, even 12 months, certainly, you would go to an event. I would come back. I'd try and tell you what I could remember. It would maybe be 3 slides. And now you can kind of summarize everything. It's incredible. Like, and how quickly you can synthesize the information.
Thank you.
Ja, what are your thoughts? What anything we're missing? Anything that stuck out for you? Ja was like the perfect student. He was like right in front, right in the second row, right in front. So actually, Jeff, you were pretty close to him. Actually, you guys were right up front there.
That's because I'm so short. If anyone tall is sitting in front of me, then I can't see anything.
No, fair enough, fair enough.
But yeah, I'm amazed at how much you picked up. I actually battled to understand and to hear Robert.
Yeah,
I wasn't, I couldn't hear him well. He was speaking very softly.
He speaks very softly. I mean, you heard that in the recording this morning when I tried to play back the thing about the investor.
Yes. Yes, I really battled, and also to understand him properly. So if you ask me to repeat what I picked up from him, very, very, very little. So I'm amazed with your summary. I must go through it.
Yeah, no, look, I'll share it with you. I mean, I'll let you in on another little secret. So what I've done is I've done two different things. So I've done a summary here, which as I said, worked till 1:30 this morning. And I mean, even going through it now, there's a couple of things I'll change before I share it with people. And I'm definitely going to add that seeker thing, because I think that's really important. But there's another document.
You see, there's the guy telling you he was at the seminar. He's come back. He couldn't hear. He doesn't really know what to spoken about, etc. It probably applies to the bulk of the people. And here we've got you that can go there, and then you need to give the share, obviously bring that down to our level and say, this is what we should be doing, buying X, selling Y, don't do this, do that. What are you doing? And I think he's endorsing what I'm thinking.
So, Alan, is this the moment where I walk around with my cap in my hand and say, hey, I want to go to America. Who wants to pay for me? And I'll come back and give you all a summary.
No, look, I think I'm correct. It's true. You need outside help, and it needs to then be translated back to somebody that simply that we can do it. Otherwise, you won't do it.
Yeah. So look, Alan, I tend to agree with everyone that's saying that. Look, I mean, there's two parts to what I would say. One is, I mean, I think technology is phenomenal now in terms of, but even before technology, and when I say technology, AI specifically, and again, I'm sorry if I sound arrogant here, but I have always been good at synthesizing a lot of information, contextualizing it. So like if you take Ray Dalio, I took all of his books, all three of his books, all of his TED Talk, plus all the stuff in LinkedIn, which if you've ever looked at all the stuff in LinkedIn, there's a lot of stuff. And I took all of that and I turned it into a 90-minute presentation. Now, I don't know, maybe that's just why I was able to cum laude 2 degrees, because I could understand stuff and then kind of synthesize it. So yeah, I mean, I do have it's weird. I feel like JD Fox now, but I do have a gift like in that space, but the technology definitely makes it a shitload easier. What I did just last night would have taken 3 weeks, you know.
Sure.
And I think Archie's onto something. I wasn't planning on doing it, but I mean, there's no reason why I couldn't do the other speakers as well, and chuck it in and come back with something. Thank you, Shoal, for what you put in there with gold, silver. I'll go check it out. In terms of that, you put it in the chat box. I appreciate that. I think one other thing that I think is relevant, and back to what you said, Joe, about Robert Kiyosaki, he did speak very softly, and sometimes I actually had to find myself really, really having to pay attention, if that makes sense. So, like I thought this would be quite basic entry level stuff. Personally, I thought it'd kind of be rich dad, poor dad level, and I don't know, maybe I've evolved a shitload in 20 years. That, because I haven't read that book in 20 years. I remember when I read it, it was like way over my head. And but actually when I sat there, I found a lot of stuff actually really interesting, but also, quite, like I had to really concentrate to kind of make sure I understood it. So that's my first point. And then my second point, Alan, which backs up what you've just said, was when we paid Cash Flow Quadrant, I had a doctor, a lawyer, who was the other guy? Anyway, some other guy was like in merchandising or sales or something. I couldn't believe how little they knew. Like little things like the share price range is from $5 to 30, and the share price is currently $30. Do you want to buy, yes or no? And like for me, that's common sense. Like you don't want to buy the price, the share at the top of the market. But they had no idea, like absolutely no idea. They had no idea how to buy a property or get a mortgage or anything. And you realize, actually how much this group of people, let's call ourselves seekers for the purpose of tonight, actually are that much more advanced than the average Joe. And it's not a brain thing, because you've got doctors and lawyers and whatever involved. And I find that quite astounding, actually. Thank you, Archie, for the link there as well. I found it quite astounding, actually, how little people knew. I found it actually quite bizarre.
I mean, the question is, should we be holding cryptocurrency?
So I think again, Alan, that's a question that you can't answer one for all.
Why?
So let me
Because you've been to all these things, and they're telling you, or in my simple terms, something that the dollar's going to crash one of these days, and cryptocurrency and is going to be the currency. And you've heard that coming out, I guarantee, out of these speakers today. So why have people that not sitting and have gone and bought proper crypto? You don't have to go and buy everything, but you buy a couple of 4 or 5, and you wait for it to have this big explosion.
Well, let me show you quickly, because I mean I know I take people through this when we do the challenge, but let me just go back to it quickly. So if you go to the wealth report, and you take the 500 wealthiest people in the world, they've got 2% in crypto, 3% in gold. Okay, so just interesting. Like, now when you and Alan, you were at the Wealth Weekend, and someone was asking, Steve, I think it was asking about crypto. Now he's very bullish in crypto. He's got a lot of his net worth in crypto. And I mean, it's not an age thing, because I mean, Alan, you were sitting next to Steve. He must be, I think Steve's late 60s. I think he's 68, 69. And he's got a lot of his net worth in crypto. I mean, he bought an incredible house here in Knysna. In fact, he bought it and built it all on Bitcoin, the whole lot. He built it on Bitcoin. But when he challenged Garth on it, Garth was like, I don't think Garth owns any crypto, none, zero. Is Garth's more traditional? Now, I tried to open a debate that day, because I know, and we've had it on one of these calls, that Anthony's got about 10% of his portfolio in crypto. So
from Calio, Anthony from Calio.
Yeah. And I think the point being is that there's a couple of ways to answer it, and into your question, like, why don't they advise? Okay, so firstly, it's a very gray area when you got financial licenses about advice in crypto. Like literally, Garth and Anthony have said they've got to be very careful what they are or aren't allowed to say when it comes to the regulator around crypto.
No, but you see, I've got problems with that. It must be left to me. You've got to, let's just use you, I would say. If you came back from the Johannesburg to the weekend, and you said, guys, you need to go and buy X in crypto. I know the rules, you can't tell this, but somebody should be telling me, Alan, you go and buy 1,000 rand of cryptocurrency, you better do it, and you keep it. It could go. Then it becomes to my choice to do research, say, no, geez, I don't like the currency and all that. But I have difficulty with Calio not saying that. In fact, Calio told me when I went to them, and I want to bring him on up here, not a mention of crypto. So what it's saying to me, I've got to go out and find somebody else now.
No,
because I know that you've got to hold crypto. If you invest in with the current situation, you've got to hold something in crypto and gold.
And I think the point being is that if you take the 500 wealthiest people, it's somewhere between 2 to 3% is in crypto, and somewhere between 2 to 3% is gold. So call it 5%. And as I say, Anthony maybe a bit more, on the range of sort of 10%. I haven't ever seen, and I stand to be corrected, and I'd love anyone else. I know there's people that have it a lot more than sort of the 10%. Marina, I'd love your kind of thoughts on this. But the point being is that the general kind of talk of the town, from whenever I've heard it, is somewhere between kind of 1-2% to 10% in crypto. That's kind of the ballpark I've heard. Obviously, there's people.
Well, that's fine.
Yeah,
great. If I want to put 12 or I want to put 5, that's my decision. But I think my direct question is, I should be told, Alan, you get some crypto. That's my advice to you. You don't want to get crypto or don't.
Yeah.
As a financial, whatever you want to call yourself, guiding people, whatever, to look after their stuff. That I think that's the answer I'm looking for.
Yeah, no,
So you get some gold, get some, have a diversified portfolio. I mean, that's what it's all about.
but that's why, this, unfortunately, this Knight Frank report, it's called the Wealth Report. It comes out every year, but last year, so this is 2023, it's not 2024. And in 2024, they didn't do this wheel, which was a real pity. So it's 1 year out of date. But the point being is that, it's pretty clear what the 500,000 wealthiest people are doing. And, I just sort of say this to show people, like, where they've sort of got the breakdown. And as an example, in equities, they've only got 26% in equities, 17% in bonds. So they're sitting in terms of 43% in kind of the secondary market. They've got a couple like through REITs at another 5%. So they're sitting at a kind of like 50% in the secondary market, and then the rest is all in the primary market, which is just interesting. But I think, Ellen, the simple answer to your question is that the financial markets are scared of crypto, and advising people on it for many.
Yeah, but then
many
you
reasons.
must tell us, look, everybody, the market's scared, don't buy. This is my advice if you want to get wealthy and keep it. I don't make sense to me. Whatever you taught me, don't go and buy another house. Here I've got a house in London. You know the story, one stuff up. If I had have known you 8 years ago, do you think I would have bought that house? Now, yes, I can go and buy the flat or whatever it is if I don't believe in buy. But what have you taught me? Buy a building that's going up and take equity in there. Now, what's the difference of that? Saying, well, Alan, please make sure you've got 2%, 1%, 10% of crypto in your account because it's going to go up in 5 years' time. That's going to be it. You're going to double your money. So this is the problem I have with investing. I must be able to then make the final decision. But you've told me not to buy a house, and you're right. In fact, I got an offer today. I've got moving on it. And it's in a beautiful flat, whatever, wrong decision. Because why? No one taught me.
Yeah.
Don't buy that type of stuff.
But I think, Alan, that's
I've answered your question about why we can't be told to buy crypto, can't do this. When you don't go and buy cold house, you're not going to make money. In fact, I'll give you feedback. Everybody who tells me they've got a second house they're going to buy, I said, don't touch it, please. They look at me. People don't know to go and buy and get equity with a building that's going up, get involved like you're doing in Manhattan. Can't summarize it better.
Yeah. No, look, I hear you. Look, I do try, again, I do try to show people, you've all heard me say it 1,000 times, how do you get wealthy, copy a wealthy person? Well, this is the portfolio makeup of the top, 579,000, call it, 580,000 wealthiest people in the world. And this is their portfolio breakdown. So, I think, and again, so that's why we've tried. If we go back to this here, we've got, sorry, I've just got to go back to the right place. Let me just go back to Asset Mastery. If you go through this, we've brought up multiple things that aren't on our platform. Gold and silver is not on our platform. ETFs are not on our platform. Crypto is not on our platform. So just as an example, we've brought in and we've tried to bring in experts or authorities or whatever you want to call them in specific sectors that aren't on our platform, but we still believe that people should know about it if you're following the true principles of diversification. That would be my philosophy. The challenge that I have now that I'm going to need help from the community in the next probably 2 months or so is that now that we're starting to do the fundamental building blocks and we'll complete them of the 16 macro trends, the investment trends, exponential technology, and then society 5.0, and then finally the 100-year life. Once we've done that full cycle, I think it's probably going to be time to go back and start revisiting the different assets again, to A, go back through the fundamentals, but B, go back through updates, in terms of where we're at, what's happening, et cetera. That would be my opinion. But yeah, there's a lot to learn. And I think, I think the fact that there's 1,000 people in the room on Saturday, Sunday, And they're all paid to be there, by the way. So they're all paid at least $35 to be there. I think is a sign of what you've been saying for a long time, Alan, and I think we all feel it as well, that, the system's broken and there are people out there that are trying to learn. My thing that I don't like, and for John, Nirvana, and Jeff, what I don't like about those events is everyone stands there, teaches you something, then tries to sell you something, which basically means people are running around like headless chickens. And it's no, what you're saying, Alan, which would be far more valuable, is a combined, concise, holistic plan versus people. I love that thing with Ann Wilson where she says it's an octopus on roller skates, like it's going in 20 directions, and I think that's the biggest problem. Like,
the bulk of the people
yeah,
going there the bulk of the people going there that have left or whatever, if they would have been like Alan Ross or something, they won't do anything anyway.
yeah. Well, yeah. I mean, Alan, you'd be surprised how many people I meet that are like, oh no, I bought like 6 courses at the event, and I'm like, how are you going to do 6 things? I mean, our mastermind alone is quite an intensive process. If you've got just three of these, it's like impossible. Shona, I love what you said, and Alan, Shona said, I like how honestly from the heart Alan discusses things. I thought you'd like that, Alan.
Thank you.
But
Scott, can I just come in there?
Oh, please do.
If you don't mind. Answering to Alan, I know that crypto being such a gray area, it's not something that you specialize in. Although you're trying to help him and with the mastermind, it's not something you specialize in. And there's nothing wrong if Alan would go and look at somebody else like Paul, for example, or that Troy Harris, the Australian guy. He seems to have a very nice program where it doesn't cost you a lot of money, and he teaches you how to actually invest in it, and when to get in and when to get out. And
I
think that would help.
Okay, I know that you speak. I know Troy Harris and whatever, and you're correct what you're saying. But I don't think I've been to Troy Harris. I could come and lecture there actually in Scotland if you'd pay me.
Okay.
He's a brilliant guy, but that's what I was saying to Scott when I must now go after Troy Harris to learn to buy crypto. Scott should be able to say to us or to me, Alan, you need X crypto. This is what your portfolio looks like, is that wheel that he's saying. Don't bugger around, get some in crypto and all this. And obviously he has the knowledge, the experience, the calmness and all that to do it. And that's what I'm just looking out of my last move, and I'm not joking, it's just Scott. He should be telling me, Calio should be saying, why haven't you got crypto in your currency? They know, because everybody's too scared, weak. Well, if you don't want to, I mean, no one's forcing you to buy. Don't buy crypto.
No.
Don't buy Anglo-American, or don't buy. The choice is yours, but at least somebody's saying is buy some shares in the S&P 500 or whatever.
Alan, I would
if I ask,
I'm sorry,
am I out of line here, Scott?
No. What I was going to say,
Yeah,
I just wanted to remind you, I would strongly recommend watching this thing and even rewatching it for people. This one that we did on the 15th of Jan with James Painter, the one I showed you earlier. This is what you're asking for, actually. So what James did is he went through I can't remember now, but the top 10 cryptocurrencies. He said, right, in my opinion, based on all the charts and everything else, these ought to be the ones to look at. And I mean, I know this happened. I know, like literally, John T, when I do these events at night, he listens and whatever. And he came to me the next morning. He's like, I want to buy Bitcoin and I want to buy XRP. So anyway, so we set it up. It's actually very difficult to buy stuff for a person who's under 18. And we set it up on a trading platform and we put 1,000 Rand in. And anyway, he was super excited about it. Well, if you do it, I know, but in January, Bitcoin and XRP went down. So his 1,000 Rand went down to 700 Rand. And he was like, no, this is shit. Like, he doesn't like this game because the money disappeared. So, but anyway, that's the whole reason that I'm trying to teach you the lesson, that it doesn't always go up. Like, you've got to be able to go with the ups and the downs, But I mean, James gave us some very valuable insights into which cryptos and why, and all of that stuff. I mean, well, I find James a very smart guy. And I think Alan, to your final point, and to some extent, Jar, I think what you were trying to say is if I don't know the answer, like I certainly don't know the answer to every asset class in every part of the world. But what I do try and do is bring in someone who I know.
No, you do.
and trust.
Excellent.
No, but I think
You
the
do,
point
yes.
you have to bring in, you have to be careful of who you bring in, because if you know,
Sure.
I've certainly done it in the past where I've said to people, "Hey, this is good," and then it's not good, and then it's a bloody disaster. And
No, I understand that. It's very, you've got to be
Yeah.
very, but like Troy Harris was mentioned.
yeah,
Now, what I should say is, with respect, Scott, don't take it. You should be listening to Troy Harris then
yeah. Well, I was,
about crypto.
I was there. Yeah,
Have you listened? Have you listened to him?
yeah. No, I've seen him speak twice now. Yeah.
Okay, so you've been to Joe, and what is he? I don't think if you listen to him that you take in any risk in crypto if you buy a couple of bob in crypto.
Well, I think,
2%.
Alan,
there's always risk.
yeah, but I
Yes,
thought,
but there's risk in shares. I've got shares in Alan
Yes.
Gray. You should see some of the shit that's going on in Alan Gray, and that's all. You know, if you invest, you'll lose money, but you should make money. That's what I've come to the terms. And if you do it properly, you'll lose very little.
but
If
also
it
think
goes down, so.
But I also think it's one of those like what's good for you. So like I'm not a trader. Okay. I don't want to be a trader. I never have been a trader. That's why I like business and property and even Bitcoin. Like I started buying Bitcoin in 2013 and a little bit, and I kind of bought up to 2017. I haven't bought again since 2017. And the reason I say that is because I didn't buy a lot, unfortunately. I wish I'd bought a lot more. But the point is I just
There
bought
you are.
no, but the point is, I just bought and held. Okay, like I'm a buyer and a holder. I don't try and ride the waves. I don't try and get right. Whereas Troy, and tell me if I'm wrong, but Troy makes money by helping people effectively almost day trade, like buy on the buy, like as it's like it's the reds and greens. So it's Troy does crypto and Sandy does the stock market, and that's all about reading the signals up and down, and and having I can't speak trading. I don't know trading. It doesn't really excite me. It's not my game. It doesn't make it wrong. It's just not what I want to do. I mean, I always argue with people in the 90 minutes we've been on this webinar. If I was a trader, I could have lost a shitload of money, like because who knows what's going on, like. Whereas, I like the fact that I could go watch John T play rugby this afternoon, and I guarantee you nothing happened to my property up or down. Like, well, you know what I mean? I just always enjoyed that, preferred that. But again, I repeat what I liked with Robert Kiyosaki, where he said it doesn't make it right or wrong. Like there's brilliant traders out there, and they don't like the boring old property and business that takes forever, and just different strokes for different folks, But I do think the final thing I would say on the crypto thing, Alan, and for everyone else, when crypto was really taking off in 2017, and I mean we literally came out with our own coin, so I know a lot about crypto, more than a lot, in terms of launching our own coin and everything in between. And what I said to most people is that you'll never learn by just learning and watching and reading. Like you should buy some, and that's why we've got John, 1,000 rand. Like it's not going to kill me or him if we lose 1,000 rand. But he's in the market and he's watching and he's seeing it go up and down. He's not reading about it. And I just think the best way to learn anything is to even participate a small amount and just to watch it. Watch.
I agree with you. That is 100% correct.
Yeah, and that's why on our platform, if my compliance officers and everyone had their way, our minimum investment would probably be $10,000. But my philosophy is make it $10 and let people dip their toe and learn and grow and all of that stuff. So that's kind of our mentality, because I honestly believe in nowadays it's all about learning while doing. So, any other thoughts, Shona, Anna, Charles, Kelly?
Well, I have a thought. Your Irish video just came in. So you were talking about Kiyosaki, and I just got a video of you with Kiyosaki.
Okay,
Did you have a look?
No.
And the other thing I was going to say is I can send Alan the recording from James Painter's webinar.
Yeah.
Okay, I'll do that.
Yeah. Just remember, Kelly and anyone else watching, that I've only started cutting up the videos more recently. So if you see our 15th of Jan, remember the first 30 minutes will be the market update, which I would recommend you don't watch because it's 4 months old, 5 months, whatever. So I mean, if you go here and you press play, you must go like 30 minutes, because you can see, you can see the moment sort of Anthony stops, around 30 odd minutes, and then you watch it from there. More recently, I'm breaking it up. You can see the Calio commentary here, and then the exponential technology. Like I'll do the same today. I've already done the videos where I've broken the 2 in half so that people can watch just the parts they want.
Okay, cool. And then the only other thing is you posted that, what was it? Social 5.0 on the group, but I saw on your YouTube it's still in your drafts. So I don't know if that was intentional or
No,
not.
I've changed. It's been updated.
Okay, I didn't want to publish it if you did that intentionally.
No. John Dee was playing rugby and I had to get out to get to the game, and it was uploading. So I don't know why I did that, but there we are. It's live now. So it's unlisted,
Okay,
but
cool.
it's on purpose. Like, this is only for mastermind members. So
Okay.
I saw Jeff's comment, but it's thank you. I've got it sorted.
Okay. I
Okay.
think that's all from me.
Yeah. Okay. Well, I saw a couple of people said that they would like the updates from the other speakers. Maybe that's going to be my new profession. People can pay me to go to events, which I love. And then I'll just write summaries for everyone. I'll become like the blink list of seminars. Anyway.
Scott, can I just ask a question?
Anna. Perfect.
Hiya. Just the investor weekend or investor summit, is that you said that's on a cruise?
Yeah, so it's I
Is
don't
that
have a lot of
just stuff that you're going to
details.
send out?
So I don't have a lot of details. Yes, as Robert, I can tell you one thing. Like, he's a grumpy old man. Okay, is the best way to describe it. Okay, so on Saturday morning,
I've seen a couple of interviews. Yeah, he's not
like,
always been
seriously,
that
on
pleasant.
Saturday morning, there was someone in the front who was on his cell phone, and like he was swearing and he was stand up. I don't know, Joe, if you were there already. I mean, I was like, couldn't believe my ears. Okay, he was like, "Get the fuck out of my building! You disrespect me! Get up, stand up!" He basically humiliates the psych in front of 1,000 people. Like, it was unbelievable.
Wow.
Like,
I think he can though, can't he? He's got to that stage where I just don't think he gives a.
I was just like
I
dumbfounded.
think he just can't get away
I
with
can't
it.
believe you can get away with that. Anyway, the point being is that when
Hope
he
he didn't swear at you.
when he brought up, well, exactly, just sit in the back corner. But
Yeah.
when he brought up the investor summit, this young guy Nick, who kind of seems to be his aide, that kind of runs around and does everything, and he put it up and he started talking about it. But then he's like, "Nick, give me the details," and then Nick didn't have the details. And he basically, I cut this part out, by the way, in the little audio thing I did this morning. But he basically shits all over this Nick Oak on stage. He goes, "I'm old. I can't read this shit. You must just give me the details." I can't believe it. I give up. You're bloody useless. Like, I was like, yes. So
Wow. It's a bit
anyway,
awkward just standing around. You're like, okay, let's just let
anyway,
it just gets out of the system.
I've got Nick.
Okay, so maybe I don't want to come on this investor summit with him then.
No. I think it's going to be magic, by the way. Like the way he spoke about it. It's just all I was trying to get to is the details. So Nick did the details. So I got hold of Nick on Monday morning. I said, "Look, I'm really interested in this, and I want to let the other investors know about like my mastermind members about it. Could you give me the details?" And he said he's going to try and get them as quick as he can. As soon as I get them, I will share with everyone the opportunity. I'm really, really keen to go. And, like I said, I can't remember, Anna, I don't think you were there this morning. Literally Robert called me over, like personally, one-on-one. And he said, based on what you do, you need to be on this investor summit. Now, considering there's only about 7 or 8 speakers, it's quite a big thing because it's quite a big opportunity. So I'm really, really keen to go. But obviously I want to get, and I know there's a website and everything else, but I want to kind of get the behind the scenes plan.
Wait 5 minutes to finish.
Yeah, so.
Okay.
I hope you'll
and you're still thinking of.
this.
Sorry, excuse me. Just another question. Are you still thinking about doing the Portugal wealth weekend, or is that happening now?
What we've agreed with Paul O'Mahony and Garth is that we're definitely going to do the Portugal one, but not in September. And the reason being is that there's a whole business component that we're putting together between Calio and Paul O'Mahony, etc. And Paul's got a massive database and reach in England and Europe. And so we want to do it, and we want to do it properly. And kind of 3 months is not enough time to do it properly. So what we've agreed, we're going to do the next wealth weekend again in South Africa, but we'll give people that are going to fly internationally a discount to make it kind of worthwhile from a parity perspective. But what's actually interesting is that I did the maths, and if we take the average number, it's actually cheaper to help people fly this way than it is to fly the whole Calio team to Portugal. So we are going to do it. It's just my biggest problem, and I'm just kind of airing my dirty laundry here, is now they've buggered up my dates because like Portugal in September is bloody amazing, etc. So, but anyway, there's no point in doing something half-assed. If we're going to do it, let's do it properly.
Yeah.
So for planning purposes, the next Wealth Weekend will definitely be in South Africa. I think it'll be in Knysna because it just makes so much more sense. And then we'll plan the next one in Portugal, but that's probably going to be, well, not probably, it'll definitely be next year.
Next year.
And then now I'm going to have to, because like March, is Portugal, I don't know, Joe, maybe you can tell me, is Portugal weather good enough for March?
I was just going to say, this year, March was actually very cold and very windy. And they had a lot of rain, which normally, Algarve normally doesn't have much rain, but this year they had a hell of a lot of rain, and it was very cold and very windy. I don't know if you shouldn't rather consider later on the September one. Just a thought. I haven't been there. I just heard from my family.
Oh, well, Olga's saying do it in May. And he lives there, so that's good insight.
Just a thought,
okay, Joel. Okay, I'll go by your recommendation then. Yeah, no,
but I think the point is they've kind of messed my rhythm up because I want to always do one in South Africa, and it'd be good to do it in the summer season, and then I want to do one in Europe, and it'd be good to do it in the summer season. But now we're going to be cockeyed around. But there's also no point in it'll take a huge amount of cost. And again, I just want to repeat the numbers for people. Like to run it in Knysna we can do it really affordably. I don't have to pay for any of the Calio team. I don't have to pay for their accommodation. I don't have to do any of that. So we can make it very affordable. If we go to Portugal, we're going to be international flights. I wouldn't be surprised if that business. You're going to have accommodation and everything. I reckon we'll be probably somewhere between 3,000 to 6,000 euros per person just for the ticket. And that won't be profit. That'll just be to pay for all the shit. You know what I mean? So I'm actually thinking it'd be better. Anyway, for all the reasons I've just said, I want to do one in Europe, but I really need Paul. So I've spoken to Paul O'Mahony and Simon Zuski, and I really want to do something properly with them. But that's going to take 6 to 12 months to set up properly.
To sort out.
3 months.
Okay. All right.
Good job. Cool. No, but thanks for the questions. I do think. I mean, Anna. I mean, you were there. Who else was there from England? I mean, I really want to try and get back to doing some real life experiences. So a mixture between Wealth Weekends and buyers trips, and kind of a combination of the two. Because I just think, there's so much value at the mastermind level if someone's been to a Wealth Weekend at least once, or even like where you guys came to the buyers trip. Like you're just meeting people face to face. It's so much better than the Zoom stuff. The Zoom stuff's fine when you've met someone face to face, but if you never meet them face to face, there's always that level of not knowing. Helga's online as well. He came all the way through to England. It's just a different experience. Dawn's online as well. She was also there. Nirvana came and partied in November and nearly killed me. Safina was there. when we it's too late now. We stopped working. Work finished at 9:30. Anyway, but no, when Nirvana and Caroline and all of them were when we did that workshop in Pretoria, crosses, we went out to this dodgy like nightclub. It's like basically where we went to students. Like, and remember, I was a student like 30 years ago. And we bloody partied till some ridiculous hour, and I didn't feel very strong the next day. That was for sure. But anyway, we had lots of fun. It was a fun evening. Anyway, Caroline, are you going to add to that?
I was going to say, I don't think it was the time you went to bed. I think it was the volume you drank.
No, we don't talk about that. That part gets censored. Anyway.
But it was a fun night.
Yeah, no, it was cool. It was cool. Well, as I always say to people, you have to work hard, but you also have to play hard, So anyway, cool, man. Well, I think unless there's any questions, I can see there's one in the chat box there. Is there anything else that I can help with? Helga just said do it in May. Yeah, no, I think we've covered everything. Thanks, Archie, for the stuff from Mike. I've heard of him before, but I haven't watched his stuff, so I'll go and watch his stuff. I just think, nowadays, I mean, I just think I actually don't know where the world's going to be in 5 years, because what I mean by that, and I'm literally mean 5 years, because it feels so far away with AI. But nowadays, you could literally go to ChatGPT and say, right, write me a 5-page document on all the most important principles that Robert Kiyosaki teaches, and update it to take into account current trends and whatever, and tell me what I should do. Like, it's unbelievable how much you can ask. And, there's a part of me that's like, how are people going to read books? Why would they go to seminars? Everything. Because you could just, I mean, even Mike Maloney, the very first thing that goes through my head with Archie is, I'm not going to go and watch fucking 10 videos. I'm just going to put them all into ChatGPT and get my pacey version. Like, literally, that's what went through my head. Anyway. Okay. Well, thank you very much. Thank you, Scott. Love the way you used AI tools to bring these amazing insights. Yeah. And Safina, like I said to you yesterday in our one-to-one, I mean, I'm sure that I've actually paid to do a 30-day AI challenge. Cost me £20 or $20 something. And they bring a new tool to you every day. So I am trying to do that. But if anyone's got any tools that we are not using, or that I'm not using, or anything that's good, I'm all ears to try whatever. I know that Safina yesterday was saying, she wants to empower businesses with AI and to make them more productive. So yeah, please share. Like, for me, you can never know too much. So, okay, everyone. Well, have a wonderful evening. I will let you all know that tonight, by us being here in this mastermind, I lost out on a night in the jacuzzi with beer with an old friend of mine, because he arrived on my doorstep at 5 p.m. this evening. Kelly, you know him, and he was sitting by a jacuzzi having a beer, and it took a lot of willpower to sit there and not participate. But anyway, it's actually been a fun conversation. I really enjoyed it, and I like the participation as well. Somehow we got to figure out how to do more of this. So yeah.
Thank you so much, Scott. That was really great.
Cool. Awesome. Cheers, everyone.
Thanks, Scott.
Cheers, guys.
Thanks, everyone.
Cheers. Thank you.
Thank you.
Bye.
Cheers.
Bye.
Cheers.
Thanks, Scott. Bye.